All right, good day, traders. Welcome back to the live room. Happy Thursday to you. Hope all is going well. It feels like the end of a week, meaning you get to that peak at Wednesday, and then you're just trying to survive until Friday. Really, Thursday. Thursday is my last really. Well, we have the Q&A tomorrow. Usually Thursdays are my active day. Friday are kind of my day off from work. Kind of this 4-day work week type deal, but hanging in there, a little tired, but excited to be with you for our last live trading room session of the workshop. We do have the Q&A tomorrow, which is a more laid back feel with myself in Greystone, but hope you guys are excited as well. Do me a favor, right? It's been a long 2 weeks already. Give me something that stood out to you this week. What is something that you maybe learned, something that you know now you didn't know before, something that was reinforced? Give me an idea of something that has really stood out to you during the workshop this week. By the way, I got to say this as well because the scammers are out there. If you get a message from me on social media, it is not me. I don't DM. Feel free to follow me again at Akil Stokes RTM. But there are a lot of fake accounts out there for myself, a lot of fake accounts out there for Greystone. They know we do workshops. This is their prime time to kind of poach people and try to like, hey, let me manage your account. Just send your money to this, blah, 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 blah. Please don't fall for it. Please do not fall for it. You can DM me, right? I love responding to your DMs. But if I ever DM you first, especially with a message that says something like, hey, or how's it going? Definitely a fake. And then report, right? Nothing we can do about it. They never take them down, but at least you feel good about yourself. Let's say, have a robust trading plan. Yep. Trading plan is like your business plan. And we really just talked about I know you had some training on trading plan, but here in the room, we only talked about kind of the rules of engagement part. The trading plan is so much deeper than that as well, with philosophy and psychology, with kind of emergency protocols. It really is a guideline for everything you need to do. So that's cool. Ray says, do we have access to videos and material in the Bridging the Gap portal after this week is over? Yes. Yep. Videos are going to be available through August 20th. So if you are late to the party, or if you just want to go back and review, which I always recommend doing, review, practice. Videos are going to be available from this workshop until August 20. Then take them down. Billy says, but you followed me, Akil Stokes RTM 2 T's. Well, I'll tell you, Billy, what they get slick with is like the L's. Instead of an L, they'll do like a capital I. It is, let's put it like this. I followed myself once. That's how good they are. I followed myself. I swear it was, I manage a few accounts on Instagram for some different businesses and whatnot. And one reached out to another account and I followed myself. And I'm like, oh, it looks like me. I guess I requested myself so I can see my own stuff, or I don't know. You know how it is. You get a request, and you kind of click it. And I followed myself because they used Akil Stokes, but instead of the L for Akil, it was a capital I. It looked just like it. I had to give the guy some credit. I had to give the guy some credit. I said, you know what, man? Well done. You're good. You're good. But yeah, that's a true story. Idea of treating trading like a business. That is, again, something that most people don't think about. It's a hobby. It's a get rich quick scheme. We shared some stories about that yesterday on our trader coffee break yesterday. Many traders don't think of it like a business, and not just the business in your expectations of what you can get from the market, but the business in how you go about setting things up in the market. And how you go about preparing, right? Because you have to prepare a certain way if you want a successful business. And like most businesses, many traders fail in the very beginning stages as well. So cool. Here's some cool stuff here. Let me just scroll down and we'll get to some chart work in a little bit. Charles said if they put that much effort into scamming as they did into act, that's what I always say, Charles. If you just use that power for good. Here's the new scam, I think. and maybe I'm being paranoid, but so I'm getting all these scammers out, and then I get these emails of services that charge me to get rid of scammers. So I'm like, maybe these scammers are simply creating these accounts, bothering people so they can get my service to remove the scammers. But the scammers are the same people of the service that's removing the scammers. So all they have to do is click the button, right? That could be it as well. I don't know. I ignore all that stuff. Just be safe out there. Be safe out there. It is world. Yeah. If they give you a WhatsApp number, I'm not on WhatsApp. So anything like that, a WhatsApp number, if they tell you to send money anywhere or manage money, not a Keel. All right, we're going to scroll through the charts kind of in order today. But I will ask you first and foremost, is there any place you guys wanted to start off? Any place in particular that you want to start off for today? If so, let me know, especially for those watching kind of the first trade of the day here on social media, whether it's YouTube, Twitter, LinkedIn, wherever else this is streaming to, because you guys get one opportunity and I boot you out. The rest of the live room members will be in here for a while. Vic says gold. Real quick, Becky says, what I learned, separate my trade patterns into good, better, best. While I have mentally done this, this seminar has encouraged me to go back and test the middle category. Yeah, I'll tell you what I've done in my career, and it's an interesting story because I've went from super conservative. Well, let's put it like this. I went from super aggressive when I first started trading because I was a new trader. I was, everything was a new shiny thing. Whatever I saw on the internet that day, I'd go into the market and start trading it. So I went from super aggressively in reckless trading. I went complete 360 or complete 180 once I learned how to trade to becoming super conservative because I knew that the problem with my trading is that I was doing too much. I was over trading, all that fun stuff. So I went to being really, really super conservative. As I've evolved as a trader, and this is after becoming a consistently profitable trader, I have become more aggressive, yet more conservative at the same time. Now, who can take a guess at what that means, right? That sounds kind of, how can you become aggressive and conservative at the same time? And if you've been with me for a while, you know exactly what I'm talking about. If not, it's probably a little bit confusing. How can someone be aggressive and conservative at the same time? Let's load up gold here. The shiny stuff. My gold coins. I've got a bunch of gold and silver hard asset, which the plan was I had bought it, well, for Doomsday, of course. But aside from Doomsday, was for my kiddos, right? Teach them about investing and stuff like that. And then I bought this way back. Where did I buy gold at? I bought it twice. It was back had to be 2015, somewhere around here. I was pretty close to the bottom, not the bottom right here, pretty close up here, gold and silver. And then as we started rallying, I started rethinking that idea. I'm like, you know what? My kids don't know this is for them. So, right? But gold is fun. But yeah, aggressively and conservative, right? So I've become a lot more aggressive with how I trade, meaning my entry. Because I used to need everything to align, but a lot more conservative in the trades that I take. So kind of like what Becky mentioned, how she's got kind of, let's say, tier 3, tier 2, and tier 1 trades. Your tier 1 trades are the best. Your tier 2 trades are in the middle. Your tier 3 trades are like, okay trades, right? What I've done over my career is I've eliminated basically tier 3 trades completely, right? I still have tier 2 trades in there as like kind of a second chance, but basically have focused more on the tier 1 trades, my best trading opportunities, and then asking myself the question, how can I get in as possible within kind of what I, not as aggressively as possible, but as aggressively as possible per my standards. How can I get into those trades as aggressively as possible? That way I take advantage of all of my best trades and don't trade as many of the non-best trades. So it's really been a shift from quantity of trade being the focus, trade as much as I can, to quality of trade. And it's helped my trading. Now I'll tell you what, it's much more boring. I probably at this point maybe take between 10 and 15 trades a month, right? Which for many is like, I had some guy email me the other day who took like 30 trades a day, and he's all excited. And I'm like, you realize your broker probably made more money than you. But yeah, it's a little bit more boring. Now part of that is not day trading anymore for the last couple of years, but it's a higher quality of trade, which is awesome. All right, so let's start on gold here. Let me get my notes set up. We do have some news coming out. We have PPI coming out at 8:30. We have unemployment claims coming out at 8:30 today as well. Obviously, you guys were here yesterday for the big CPI report, big massive move in the market. We're seeing, I still think we're going to see a retracement of all of that, because I think the market got excited about the news, but I don't really think it's going to have much of an impact on too much. Some Fed members came out yesterday and basically tried to kill the optimism. They said, hey guys, let's not get too optimistic about this. So we'll see what happens, but the market needs to get excited about something, so I understand. So we have some more news today that is related. Let's call it tier 2 news. It's not as high impact as CPI, but it does have a trickle down effect in it. So pay attention at 8:30 for PPI and unemployment claims coming out as well. Yeah, eliminate the third tier trades. Like, what, do you need them? Like, is it worth gambling money over stuff that's like, think about that. I would keep the second tier trades in, right? Because they're still decent trades. But yeah, think about it if they're really needed or not. All right, but tier 1 is certainly the best. Tier 1 is certainly the best. See what I did there? All right, so let's go to gold here. Gold on the weekly. Well, let's go down to the daily, but weekly, you can see that we're coming off of a previous level of structure support. Real quick, Charles says, yes, that's a good point I missed on, Charles. Yeah. When you eliminate those third tier trades, right? We talked about portfolios yesterday. Bigger portfolio you have, you kind of got to lower your risk per, because you're splitting it amongst many employees. Bet more on your top trades. Bet more on your top trades. In the CTS system, combined technical score system, we talked about it. It's a way to quantify your trading on a point scale, like a point scale, basically 1 through 13, or whatever you want to be, if you customize it a little bit more. But one of the things that you can do in, say, a system like that is you can adjust your position size per the quality of trade. So let's say 4 is the minimum you need to take a trade. So 1 through 4, 0 equals no trade. 4 through 7, let's say, or 4 through 6, let's say that's an okay trade, maybe a half position size, right? Let's say 7 through 9, that's a pretty decent trade. Let's say normal position size. And then let's say 9 through 13, which are your best trading opportunities. Let's say you trade a little bit bigger than normal position size. So if you put it in a risk percentage, let's say, let's say you're super aggressive, a 2% risk on your best trades, a 1% risk, or 1.5% risk on your best trade, and 1% risk on your minimum or medium trades, and then a 0.5% risk on your kind of lower tier ones. All right. So gold here, coming off a previous level of structure support. Look left, structure leaves clues, right? We know how to read a price chart by this point. So we can see, boom, price retrace, bounce off support, retested, double bottom nicely here at support, came down, tested here at support, came down once again, tested support again. We are now coming back up to a previous level of support, which we would expect to now act as resistance, right? Again, if we just measure out the ebbs and flows of price, going to draw these loosely on, swing low, outside return, here we go, boom, we come back here, we kind of test it a little bit for a second time, and then we finally break below. As we come back up to this level, we can look for a previous level of resistance, right? We also have kind of this level right here, this elephant candle standing out. Now, something that we always want to do is want to do our IPDE process, right? We want to identify, predict, decide, execute. And we want to ask ourselves the honest question of, Do we think price is likely to move in a direction? So I'm going to ask you guys right here in the room and watching on the live stream, with the current location of gold, do you think we're more likely to go up, more likely to go down, or do you have no clue? And this is based on not what you heard on the TV this morning. This is based off of your technical analysis, based off what you're seeing on the chart. So type it in. Up, down, or you have no idea. Up, down, no idea. I'll give you kind of a bigger perspective here if you guys want to zoom out a little bit. We got Vic says more likely up. James says down. Daniel says no clue. Jason says down. Boyd says down. Greg says down. Amy says no idea. Becky says maybe down, which means no idea. If there's a maybe in there, it means we don't know. Fidelis says down. Andy says down. We got a few more people typing in. So far, consolidation. That wasn't an answer. That doesn't count. I gave you 3 choices. That's not on the multiple choice quiz. It's up, down, or no idea. Which one? Can't. There's no right-in answer here. There's no right-in. Brad says up. All right, so you can see we have a mixed bag of traders thinking up, down, or no idea. Of course, you guys want me to chime in. My answer right now is I have no idea. I look at this price chart and I have no reason, and this comes from a technical perspective, right? Not a kind of a fundamental or investing perspective. I see nothing on my chart that says we're more likely to go up versus down. I see nothing on our chart that says we're more likely to go down versus up. Right? Now, I would love to hear from you guys about what stood out for you to make that prediction up or down. Again, there's no wrong answer. I'm not going to judge you. I just like having the conversation, right? This is the closest we can get in these live rooms as an actual live trading environment. And when you have meaningful conversations, everyone learns. So I love having these conversations. So I don't want you to be shy. It's not a trading forum where we're going to yell at you and be like, that's a stupid idea. We're not going to judge. I'm just going to read them. I won't even comment on them. But I'd love to hear why you made the prediction that you think price is likely to go up, likely to go down, or why you just don't know. Let's spark conversation here. James says, "Oh, I need to practice the price action course again." I go back not every year, but every time I get in a funk, James, like every time we all hit drawdowns, every time I get in a funk and I start losing confidence in myself and I start asking myself, do I really know what I'm doing? Is this the end? I always go back to my training courses, not the ones I did, but the ones I took. And I review them just to kind of, to ensure that I'm not missing out, that I'm not slacking, but it just kind of brings this confidence when you're like, okay, I am doing the right thing and this is normal. All right. So we got, hey, Cody, since March, there has been lower highs and lower lows. Since March, lower highs, lower lows, since right here. Since this area, yep, we've been going down. Yep. I see. So it will go down. So first of all, here we gotta ban that word, will. Can we all agree with that? First of all, do we ever know what the market is going to do? Yes or no? There should be a 100% agreement on this question. And I know some of you guys don't mean it when you say will, but it really bothers me. We never know that price will go down. Or another one is we never know that price has to, right? Those are 2 words we need to eliminate. Price has to do this. Price will do this. Because do we have any control over that? Do we have any control over price going up and down? No. So let's not act like we do. We call that, and you could maybe think I'm crazy, but if you trade it, you probably think this too. We call that tempting the market gods. Whenever you tell the market what to do, the market will ensure, right, that you are wrong because it will flex its power. It is like walking around saying, I am God, right? Don't do that. Those storm clouds will come right over your head. Don't do that, right? So don't tempt the market gods. Don't ever say this will do this, it has to do this, right? That's why we say just we're just making predictions here. Because trust me, I've done that in the past, and every single time it's lost. Then I tried entering the opposite direction, but the market caught on to that. I tried saying like, price has to go higher. And then I would enter like a short position, thinking I was getting upper hand, but didn't work. So we want to say that. Okay. So going back, we're hearing my reason that price has approached a previous level of support. Okay. Let's not say price has approached, price hit support. So we did test support on the downside. We did not violate, which is important, but we did test support to the downside. So we did. James says, looking left, lower lows, we did bounce off structure, but have not broken the previous outside return. Still, Vic says, I think it's more likely to go up because I believe that there will be a big down move soon, but institutions will want a premium price to sell at. Now, so I said I wouldn't comment, so I'm going to stick to that. I got a lot of comments. I probably shouldn't have said that, but I'm not going to comment. I'm just going to read. Greg says, price has come from all-time highs with a pullback on the daily to the previous extension. Good place for a trend continuation trade. And he says, most recent trend is down. Most recent short-term trend, I would add in there. Again, I'm not going to comment. Is down, waiting to break structure on upside. Boy says, support about to become resistance. James just says no. I was taunting the market god. Sorry. Amanda says, although it has strong level of support, because I've found gold is often a fear trade rather than pure technical. Responds to too many news. No news, it settles. I never trade it. Well, everything is a blend of technicals and fundamentals, I would say. Just like, so here's an example. So yesterday we saw our CPI report and we saw the yen go crazy. So that was a purely fundamental move. The CPI report yesterday was a purely fundamental move, nothing technically based. You'll see that with oil in Canada and gold as well, where you'll see there are more. Let's put it like this: there are probably more fundamental factors that play a role because of the shifts, especially like between the shifts of like dollar versus gold or something like that, or the shift versus like oil and whatnot. So yeah, I think it is a blend. Well, every chart. Every market is a blend of technicals and fundamentals. But certain fundamentals, as we saw yesterday, and they do have a higher impact on the asset. And gold is one that, there are fear and greed based on other things that are happening in the market. They do have an effect on gold as well. Yep. That is true versus something like the pound dollar, for example. James says, love the story about technical trader telling his boss price has to go down. And boss says, oh, really? And calls the floor and puts it to order for 7 million bushels of corn and shorts the price up. Oof, shoots the price up. Sorry. Wow, that's crazy. Yeah. All right. So thank you guys for sharing. Yeah. So my opinion is this. Again, I chose the category that I have no idea at this point. I have no idea on whether I think price action is likely to go up or go down. And I'll give you guys my reason. So let's start with going down, right? So price action has been in consolidation since what? August 2020. Would you guys agree? Sideways movement from our peak right here all the way to where we're currently at. Give me a yes if you agree with that. We've been in consolidation, right? Obviously, before that, we're in an overall uptrend here, but we've been in consolidation, right? Our most recent move was a move from essentially the highs of our consolidation period all the way to the low. So a short-term downtrend. Now, if I were a trader and let's say I was selling right here, right? Where would be my destination for profits? Where would my expectation be that price comes to? Would it be all the way down here somewhere? Or would it be at our previous structure shelf? What do you guys think? It would probably be at our previous structure shelf right here. Right? Well, it would be there for me. You guys would probably say our previous structure shelf. So price action has fulfilled that move, right? It's hit that support line. We've done the job. We have fulfilled the prediction that we expected, have we not? So now the question is, okay, we've done our prediction. We've gone from here to here. That's the move we expected. What would need to happen on a chart in order for us to believe that we're likely to go lower? And whether it's lower, meaning violating this level of structure, or lower, even retesting it, right? Well, we would need a violation of the structure. In order to have a continuation of trends, we need to take out the previous low. We did not take out the previous low. We've held the previous low. The buyers have held this level and fought back. We did not violate it. We did not put in a lower low, lower close. We have a process of reading price that allows us to make predictions, right? If price action violates previous level of structure, then predict that price is likely to continue lower. We did not have that occur, so I see no reason to make the prediction that price is going to continue lower. So that's the longer term continuation, right? Breaking this previous level of structure. Now, the shorter term move is price action moving from here, our current current location, back down to here. So now the question is there anything on a chart that says price is likely to go from here down to here? And here's the cool thing about predictions, and we don't often talk about this. We talk about making a prediction. A prediction is a two-part beast. So when we're making a prediction, it's not just is price likely to go to this level, but it's is price likely to go to this level before it goes to another level, right? Because think about it when we're trading. When we're trading, we have three things on, right? We have an entry. What are the other two things we have in a trade? Entries, stop, and target. Our target is our prediction on where price is likely to go. Our stop is our prediction on where price is not likely to go. So when we're entering a short trade, we're not just predicting that price is likely to go short. We're making the prediction that price is likely to go here before it goes here. Does that make sense, guys? Price is likely to go down here before it goes up here. That's the prediction that we're likely to make. So when I see a situation like this and I ask myself, okay, well, if I'm going short, I need price action to continue lower to make profit. Is there anything on my chart that allows me to make the prediction that price is likely to go down here before it goes up here? And currently my answer is no. I don't have any reason. Now, here's the funny part. Could this be a trading entry? Sure. Anything could be a trading entry, right? You can give me any time frame, any chart, and I can tell you why to get long or why to get short. It's very easy to convince ourselves on doing that. But like we talked about earlier, what Becky mentioned, and we want to focus on our tier 1 trades and our tier 2 trades. Our tier 3 trades, which are like, yeah, I could trade this. It maybe can go down there. That's more like a gamble. We don't really need to do that. So I see this situation as that. I don't see any reason that says currently that we're likely to go short before we continue long. At least continue long to the point where my stop loss would be at. So that's why I don't have anything assuming that I don't have any kind of bearish prediction. Let's flip to the bullish side because I don't have a bullish prediction either. Why don't I have a bullish prediction? Well, we're coming up to previous structure support, which now act as resistance. Just as we did down here, just flip it around. I don't want to buy at resistance, do I? No. I would want to buy after resistance. Sure, after we violate resistance, after we get past this junk, I'd be interested in buying, but not while we're at resistance. So therefore, I have no reason to think that price is likely to go up, once again, before it goes back down. So I'm unable to, based on what we're seeing right now, and I haven't looked on lower time frames, maybe there's an intraday opportunity there, but I'm unable, for myself and my trading plan and my rules, I'm unable to justify a bullish trade or a bearish trade. So the answer for me is simple. What do I do in this situation? I just stay out. Yeah, I just stay out. I keep my powder dry, save my money, use it for a good opportunity that's out there. Now, looking bigger picture, something that we could have here, if we continue to go higher, we may be creating a potential head and shoulders. So if we push higher here and then give a little retracement, that will give us a left shoulder, a head, a right shoulder over here with a neckline being either, again, I use horizontal necklines, horizontal or slanted, depending on how it ends up forming. Right at a little structure swap zone is here. As well. Right. The break of that neckline could be a good opportunity for a long. And same thing for a counter trend trader, or for a trader looking to get short. If we go up to the extremes of this neckline or this previous level of structure, that could be a decent shorting opportunity as well. Because again, I'll tell you the difference here. We're looking at shorting right here, and let's assume we're looking for a retest of the lows. I don't know I'm wrong until price violates these highs. You can see that risk reward is not something that's in my favor. We take that same situation. If price pushes up to these highs and we get a reversal signal right here, that stop doesn't really change, right? I still know I'm wrong once this level of structure is taken out. But look at the difference in my risk reward. And ask yourself, what is worth the risk? You got trading scenario A over here, where again, we're making the same prediction. Price is likely to continue lower. Our stops, the safest place for our stops would need to be right here above these highs, because this is where we would know we're wrong. Not really a great risk reward there, right? Kind of a 1-to-1. Scenario 2, now all of a sudden you've got a 5-to-1 risk. It's worth being a little bit more risky when you have a risk reward that's massively in your favor. So although down here doesn't really interest me at all because of that risk that I have to take on to be safe in this trade, a hold up here would be different. Now, I wouldn't shoot for targets all the way down here because, again, I would have no reason to think that price is going to continue all the way to the lows. But I would shoot for maybe a move back down to like a right shoulder. And you can still get a pretty good 2-to-1 there. The reason I wouldn't shoot for the lows is, again, it's just the predictive nature. Because we've held support, right? I still don't have, I wouldn't have any reason to look for or expect a retest all the way to the lows. We're just kind of in no man's land until the market breaks and violates a level. Kind of like what's happening on dollar yen right now, unless it changed in the last half an hour. Dollar yen was putting in a nice little sideways consolidation. And it's like you don't do anything in there. You wait for the break in the market to tell you which direction it wants to go in. Mario says, there are some overlapping levels of structure going up. Therefore, you would be a buyer. Therefore, to be a buyer, you would need to clear those levels. Correct. The main level is the one that we need clear. This is the main level. We have we're going to have little minor flip flops in here all over the place. This right here is the main level I need to be cleared. So it wouldn't be the greatest opportunity, no, because of those overlapping levels of structure. That would make things difficult, especially when I would assume it would get even more choppier, or they would become even more significant on a lower time frame. So I assume that would happen when we can go down to a lower time frame and check. But yeah, it wouldn't be a great opportunity, not by any means. Not by any means. For me, the great opportunities are where we have clear sailing. Clear sailing, no structure in the way. We saw a bunch of them yesterday, man. I was watching my charts all day yesterday, waiting for retracements. And none of them came until like the overnight. I was so mad. None of them came until the overnight. Greg says, with the structure at not reduce my target level. Well, yeah. Again, I wouldn't be looking at targets down for low. I'm just giving an example of what you guys would probably be looking at. I wouldn't shoot for lows at all here. Yeah, so those weren't my target levels, just a visual example of what you guys were looking at, because for the people that said I would shoot for a move down. But yeah, I wouldn't be looking for that personally. I don't see a path to the downside, to be honest with you. Craig says 5-1 trade. What would you need to see for trend continuation? Ooh, good question. I would need to see a violation of our previous level of structure support. So here's our shelf. Boom, 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 boom. I would need to see price action violate this level. Once we violate this level, I can make a clear prediction that we're likely to continue lower. And then my style personally, I look for pullback. So I would need a retracement. Then I could look for an extension to hop on the next extension down. So a violation of this level, this is the key thing that's important to me. And it would be the same thing for the highs here. If we're looking for a continuation to the upside, a violation of these levels. So my trading style is centered around identifying key levels of structure, either trading at those key levels of structure in a counter trend fashion, or waiting for price to violate those key levels of structure and then looking for a continuation. So it doesn't really matter for me what price does at those structure levels, because either way, I have an opportunity to get involved. It's either going to be on some relief or the next extension. But we got to be at key levels of structure. And again, one of the reasons that this is a nothing burger for me is because, well, we have key structure down here. We have key structure up here. We're trading right in the middle on this time frame. Mara said, but wouldn't you need to make the prediction that it can go higher to take a position? My observation that, yeah. If we break these, sorry, go back to I'm bouncing around question. Yeah, if we break these highs, I think we can go higher. Yeah. If we break this high, I think we can go higher. Yep. So yeah, I would never trade anything without a prediction. But I wouldn't think we can go higher until we violate, I should say, not break. We violate this consolidation zone right here. And then when I say I think we can go higher, are we going to the all-time highs? No, just to the next level, just to the next level of resistance. Just to the next level of resistance, yeah. Yeah, I'm not anticipating a move higher from here. No, all right. Again, my stance right now is neutral. I don't see any reason that we're likely to go higher. I see no reason to think we're likely to go lower. I keep seeing a cipher. That's not a cipher, right, Darren? We're too long on the C leg. I need to measure this. I assume it is. My eyes tell me that, but I should double check. Oh, just barely. Just barely. And to go lower, to go lower, I need a violation of our previous level of support right down here. See this red line? This shelf we have? I need that to be violated in order to predict a move lower. So what we're looking for, key levels of support and resistance. Key levels of support and resistance. Those are, we call them decision points. Those are the key kind of balance points in the market where the market is going to make a decision. This is why it's so important that we understand how to read a price chart. We understand how to identify structure. And it's not easy, right? Because there is structure all over the place. This is what we get, right? So in the foundation course, we teach people how to read a price chart. And we talk about drawing the ebbs and flows. And the first thing we get is this, and this is where experience comes into the market. Let me know if you guys have ever been here. So if I'm reading this trend, here's how I'm measuring it out. Let me get my my tool here. Anybody ever done this? Measure out every single little blip in the market, right? So the thing is, you're not wrong, right? But you're also not right. You're not wrong that those are ebbs and flows. You're not wrong that those are levels of support and resistance. They are. But what eventually needs to be achieved is a filter. You have to train your eyes, and this is a skill. You have to train your eyes to ignore basically insignificant moves in price. Right? Here's the interesting thing, right? So I would say, and I'm pulling these numbers just out of my mind. There's no way to actually quantify this. But I would say that probably 90% of price action is pointless. 90% of what you see in your chart means absolutely nothing. For you guys that have experience, would you agree with that? 90%, is that a little high, a little low? I'd say 90% of price action is completely pointless. Meaning that it doesn't really give you any valuable information that helps you towards anything. That's what I mean by pointless. Not pointless like it does, like this candlestick doesn't matter, but it doesn't make any difference in like a trading decision or a decision in analysis. What we need to do is we need to be able to ignore that 90% and lock on the 10% that matters. The problem is this is the hard part. You guys ever been to a magic show? Right? The market is like a magic show, and it's purposely like this, right? It's bells and whistles. So I was at a magic show last year with my kid, and we're sitting in the front row. And I know how magic works, right? I do believe in like warlocks and stuff like that. Like David Blaine's, he's a warlock. Certainly a warlock. He's from out of this world. He does some crazy stuff that I can't explain. So I do believe that, there are aliens that come down here and do magic tricks and exploit us for money. But most magicians, they're actually doing tricks, right? So when I go to a magic show, I try to spot the trick. Like my goal is like, I should be entertained, but I'm like, let me see if I can figure out how he's doing it. So I'm in the front row, like perfect view, and I'm ready. And I know the deal. So the magician comes on, and like, dancing girls, and there's like birds flying around, there's smoke and mirrors, and they got sparkly suits, and there's a fog machine, and someone's head comes off, and I missed it. I got distracted by the smoke, the mirrors. I did not get distracted by the dancing girl. Just want to make that perfectly clear in case anyone's listening, right? But the head came off, and I missed it. I don't know how this head came off, and it upset me. My kid was freaking out, by the way. He was little, and he's like screaming, and I had to explain it was fake. But I'm mad because I missed it. But the market is the same way. It gives you all of these distractions, and then you get caught up by all of these distractions, especially on slow days. You get caught up in all of these distractions, and then you miss the thing that actually matters. And that thing that actually matters only comes about 10% of the time. And then to make things worse, when you miss the thing that actually matters, you get mad about it, you want revenge, and then you go back to trading stuff that doesn't matter, and you lose money, and then you want to make that money back, and then it's a whole cycle of kind of pain. But 90% of this stuff doesn't matter. So eventually, and again, I don't expect you guys to be here now, but eventually you got to get to the point where you understand how to filter out what information matters and what information doesn't on a price chart. And that's why it was so easy for me to say, hey, I don't think we're going to go bullish or bearish, because we're not at a point that matters for me. There are 2 levels that really matter for me, or 3 levels that really matter for me. And we're not at any of those levels. So my mind is trained at this point in my career where I can care less about anything else happening on this chart. I can look at a chart in 2 seconds and tell you if there's a trading opportunity or not. I mean, 5 seconds. Because I can tell right away, are we at a key level? And if we're not at a key level, it typically means I can't trade. Mara says, I was thinking a short-term trade if it breaks 1753.57. Where's that at? 17. Right around here. Go lower to 1717.83s. That's the lows right here. I see clear sailing from one level to another. Would that not be similar to mercenary trading, as you called it before? No, yeah, certainly would be. Yeah, I see nothing wrong with that opportunity. Yeah, but the key thing that you mentioned was this, right? What needs to happen first? Are you interested in the and this kind of goes back. I like that analysis. This goes back into what I was saying before. Are you interested in the short right now? Mario? No. See? Even Mario, who's got this analysis, and I agree with that analysis. I think I agree with it 100%. But are you interested in the short right now? No. Based on the information you have. But if we move in this direction, if we take out this level right here, which as we go down to a lower time frame is going to be more significant. On the 4 hour, see, we have our rising wedge right here, which we're not going to get into because I'm just going to confuse you more. We have our rising wedge, which is a sign of potential relief. If we react from that wedge and we break the base of that wedge, a key level of structure, now do we have more information? Right? Now we've got different information. And now we have to reevaluate our situation based off that information. And then we ask ourselves, is there room from here to here? And I completely agree with you. But just remember, that's different than the initial question. The initial question is where we're at now. Are we looking for buys or sells? Right? Do you guys see the difference in those two scenarios? So this is what we do. We analyze, we put out our key levels, and then we wait. And that's using that if-then process, that if-then syntax. If price action breaks this level, then that opens up an opportunity to the next level of structures to the downside. Yep. So when I look at this chart, remember, I'm not saying I'm not ever interested in buys or sells, right? I'm not saying that. There are all types of opportunity that could be available. What I said is I'm not interested in any buys or sells right now at where price is currently trading. If we do something to the upside, that can change the scenario. If we do something to the downside, that can change the scenario. But that's a perfect example of Mario, well done, of picking out that key level of structure, saying, I don't care what we're doing right now, but if we take out this key level of structure, boom, now we're in business. Perfect example. That came at the right time. Well done. It's like I paid you to say that. What's that address again? All right. Akil, are key levels best spotted on a daily / weekly time frames? I would say on whatever your higher time frame is. So whatever you decide to use as your higher time frame, that's where your key levels of structure are going to be. And what you use as your higher time frame will really depend on you as a trader. So for my swing trading, right, I go daily higher time frame, and then I go to the 4 hour and then the hourly. So the daily is where I identify my key levels. And then the 4 hour, I'll identify kind of minor levels like this. If you're someone that was, when I was a day trader, the hourly was my higher time frame. So I would go hourly 15.5. So the hourly would be where I identify key levels, and I go down to the 15 and the 5 minute for actually trading. So it depends on what you classify as your higher time frame. And the key, we talked about, one of you guys said something you learned this week was, or over the last 2 weeks, was consistency. Should we be changing our higher time frame each time we look at a price chart, or should it remain consistent? By the way, you guys on YouTube, smash that like button, please. And on Facebook, I guess. I don't know. Is there a like button on Facebook? I don't know how these things work. Yeah. So as long as you're consistent with it. So when you set up your trading plan, those higher time frames, trading time frames, lower time frames, they should all be identified and they should all be consistent. You shouldn't 1 week be on the daily, then the next week be on like the 2 hour. There needs to be a consistent approach. And that higher time frame, right? That's where you're going to perform your I and your P, your identify and your predict. Your lower time frames, you're trading in lower time frames. That's where you want to do your decide and your execute. So good stuff here on gold. I thought we'd see more diversions here with this rising channel, but we're not. But this is a classic relief pattern. You can see the slope getting lower, steep slope, more gentle slope. Typically, you see a little bit of relief off of this area. So for you guys that were looking to get short, we can always make up reasons to get short, right? Retest to the highs right here and hold. So if you're looking to get short, because a couple of you guys were, here's how I would look for it, right? So price action has come. If we go back to our daily chart here, we've come to the consolidation period below our elephant candle, right? Would you guys agree? This red candle is our big elephant candle. We can actually stretch this out a little bit more because of that wick, but let's just keep it up here. We've come to that level of previous resistance. Yes? How far back should you look for key levels? The more recent, the better. Always start with your most recent levels of structure. We'll call those your outside levels. Your inside levels are going to be less important. But there's a whole process that we can teach you to do in that, so don't worry. Because the problem. So here's a. We're going to get into this again. Here's another problem with structure, and we're not going to get into a whole lesson on structure because that's going to take us a while. But here's a problem that I see with people looking for structure, especially with people that have the mindset where it's like, hey, major structure is a level of structure that was hit 3 times, or I only take structure trades that are hit 3 times. If I draw the line here, let's try it again, rewind the tape. If I draw the line here and I look left and I keep going here, how easy for it is for me. Oh, look, structure. September 26, 2012. You guys agree? Previous level of structure. Look at that shelf right on top of it. Oh, look at this bad boy. 1, 2, 3. Look at that. Bang. Structure. This must be a key level of structure. Am I right? Who's getting short? Guys? That's like the what was that movie? Old School. Will Ferrell, the person I would have lunch with if I had one choice in the world. Where they went streaking. They're all going streaking. We're streaking. Who's streaking? Everyone, look, there's all of us. He's the only one out there. Get in the car. A little cold out today, isn't it? Huh? But yeah, this is from love. I don't know why. Of all the things that could be in my head, stuff like that. Stuff like that stands out, Darren. Nonsense about quantum physics and how the Earth was made. I told you guys before, you know the moon was made from the Earth. Again, I don't want to go too far in this rant because I have a bad habit of doing that. But did you know the moon was made from the Earth? I found that out a couple of years ago when I went down a deep hole, all right, on the Discovery Channel. But the moon was made from the Earth. If you believe in the moon. Yeah. If it's actually real and not a green screen. How? Okay, real quick. I'm not going to turn this into a science thing. We're going to get back to the trading, I promise. I get distracted very easily. So in the newer days of the Earth, before we were living on here, before anything was living on the Earth, another planet was actually sucked into the Earth's gravitational pull, a smaller planet, and it collided. That's also one of the reasons Earth spins on a tilted axis and not kind of a straight up axis, if you notice that. So it collided with Earth. Earth won that battle, but it took a massive impact and, lost a little blood. That blood, or that, AKA that the rocks and whatnot from the surface of the Earth, went back into space and formed space dust. And just how Earth and other planets were formed with that space dust kind of coming together, that's what formed the moon. Because it's interesting, if you do studies on the rocks from the moon, it's made up of the exact same stuff from Earth, but only certain parts of Earth. Yeah. We can also talk about Jupiter and how it eats other planets, but we'll leave that doomsday scenario for another day. But you ever want something crazy, look up Jupiter and look up how big Jupiter is and look at how many planets it's eaten. We got a cannibal in space. But flat Earth, oh, that's common knowledge, flat Earth, duh. Come on. Is there even a debate there? But the point is, look, this structure back here in 2012, completely pointless, guys. Does it have any relevance? It has absolutely zero relevance. Now, if it was an all-time high or an all-time low, that we call that outside structure, then it does have relevance. But this has zero relevance because it's from 2012. It's been broken and violated numerous times. It means nothing, absolutely nothing in your analysis. So that's why you want to have a recency bias, right? You don't want to look back for structure. Only structure within 4 years counts, or only structure within this period counts. Because if you have an all-time high that was 10 years ago, that's still an extremely important level of structure. So we don't want to discount it just because of time. So we want to base what relevant structure has based on where it occurs on the price chart. And we'll classify things as two levels of structure, either minor or major, or we can call it outside and inside levels of structure. Outside levels of structure are basically untouched, unviolated, fresh levels of structure. Inside levels of structure have been violated before. Both are important. One is just more important than the other. But going back to the scenario, I will give you guys a trading scenario here for you guys that want to get short. We are coming up to a previous structure shelf. You can see this, right? We already measured that out earlier today. We are coming up to the consolidation zone before our elephant candle, right? That's that big red one right there, the big breakout candle, right? That zone is going to be important. We go down to our lower time frame. We see that we have a specific price action pattern, a classic price action pattern, a rising wedge or rising channel. This is typically a sign of relief. Relief means that, imagine throwing a football in the air, right? You throw a football in the air. At first, it has a very steep slope. Eventually, it kind of reaches its apex. The momentum slows down and starts working the other way down, right? This is kind of the same thing. Trends start off pretty quick, and then trends die down as profit taking happens, as less buyers are interested. And then we see a little bit of relief as new selling pressure comes in, or old buyers become seller. And then we make a decision on whether we're going to continue with the trend or go in the opposite direction. If that doesn't make sense, I love explaining that, so I can do that for you as well. But so we have everything lining up. That's our prediction, right? 1, key level of structure. 2, price action pattern in our favor. 3, you notice anything price action wise at this current level? Anything recent that stands out to you? We've tested this level before, right? Nice rejection candle here, right? So here's how I would handle it. Price action is currently working up towards this level of structure. If we can hold this level again, if we do not violate it, a violation would be a break and close above this level. This is if you're looking for a short bias. Yep, the wick. If we can hold this structure level and you're looking for relief, this is going to provide a pretty decent opportunity, right? We don't know where your entry would come at. That's going to depend on what the candles do. It's also going to depend on what type of trader you are. But you can, in general, look for shorts at this area. Your stops for these shorts could be right above this level, right? The box we drew on. Your targets, right, depending on how aggressive or conservative you are, could be any of these structure shelves, right? The base being the furthest one I would look for. This was Mario's level as well, if you remember. But you can certainly maybe take something off here, or put in a protocol. Cody does this a lot, where he doesn't necessarily take profits off, but he'll move stops to break even. So you can set yourself up with a trading opportunity like this, which is almost a 3-to-1. Again, we don't know how or where that entry is going to come, but it's a pretty decent opportunity. And then, of course, you manage it on the way down. So as soon as price action shows to be working in your favor, let's say a violation of this structure, right? Boom. Should the market look, if you're right, here's the thing. If you're right, we're getting serious now, right? I bore you to death with all the boring earth talk, and then we get serious. If you're right, should price action return higher? If price reverses here and we take out these lows, if you're right, meaning price is going to continue down, should price action return higher? I got 2 no's. Anyone else? Should we come back up here? No, we shouldn't. So do we need to have our risk up here? Man, we're 8:30 already. Yeah, PPI unemployment, 1 minute. Man, I can talk. Do we need to have our risk up here? No, right? So let's move that bad boy down to break even. And then as price violates the next level, hopefully after the violation, it would hit your targets. But let's say it doesn't. Let's move that break even. Let's move that stop loss in the profit. So you're locking in profit, or reducing risk and or locking in profit as price is working in your direction. So even if this trade doesn't win, worst case scenario, you're avoiding a loser. Best case scenario, maybe make a little bit of money. Not as much as you wanted to, but maybe you make a little bit of something. So that's how I would handle this trade. And then, of course, if you're like Mario, right? Maybe this is just target one. Maybe you have a bigger projection on the way down. So maybe you take half profit off at these lows and you're holding your second half down to this level. Numerous ways you can do that. But that's how I would handle this situation if you wanted me to make a trade, give you a trading idea. Any questions about that? PPI should be out. Unemployment. You seen anything, guys? I don't think we should see too much, but yeah. Any questions about that? Any other questions on gold? It's a solid trading opportunity. Mara says that break of 1783 would give me confidence that it can go lower. That's the level we just analyzed right here. I'll move this thing back. Mara's referring to this level right here. Yep. And that could be a conservative entry as well, right? Again, and this is why it's so flexible how you can be a trader. You can be a trader that's aggressively and wants to get it up here. You could be a trader that says, hey, I want to wait for this break, gives me more confirmation, and then I'll look to get involved here instead of up here, shooting for the same move down. And that's going to be the difference. Yeah, we can't trade gold. That's correct. Yep. Americans. Someone wrote that over on Facebook. Yep. That is going to be the difference between you can have, and we said this the other day, right? So you can have two traders, right, with very similar styles. Let's say two traders that are looking at the same thing, analyzing the chart the same way, seeing the same level of structure, seeing the same wedge / rising channel, but have two different entries. One could be waiting, one could be aggressive, one could be conservative. So two traders can be exactly the same for the most part, but have a slight difference on how they attack the trade based on their personality, based on their rules, based on whatever. That's what we talk about when we say being flexible for your trading plan. Is Mario wrong for needing confirmation and waiting for that level to be broken before being interested? No. Is Amanda short? Maybe. I don't know. Is Amanda wrong for wanting to be aggressive and getting involved at the highs? No. Neither trader is wrong. They just have two different ways of attacking the trade, but they're both looking for the same thing. And that's the cool. That's the best part about trading for me is that you don't have to do it one way. You just have to do it your way and be consistent in it, obviously. And when you're creating that trading plan, you're not creating that trading plan off of someone else. Maybe you're using that as a skeleton. Maybe you're using the way I trade as a skeleton for your trading plan, but you're customizing it based on your preferences, based on your availability, based on your risk appetite. And you're really making it something of your own. It's really cool. And we spoke about confidence yesterday. When you make something your own, you trust it a little bit more. You trust it a little bit more. Hey, Ron. All right, one last question, then I'll get you guys. Cody says, there goes pound yen. Smacked that target profit area from yesterday. She got me at break even. Ha! Oh, the yen. It was funny watching the yen pairs react versus kind of the more dollar-based pairs in the market yesterday during these events. The yen optimism got sucked up a lot earlier than the dollar. You can basically see what the dollar pairs are going to do based on how the yen was reacting first. It was kind of cool watching it. Now, I would never trade off that, obviously. That's not in my plan, but it was pretty interesting watching that. Real quick before I let you guys go for a first break because we're getting long. Should level 1 and level 2 targets be included in backtesting your strategy? What do you guys think? Should multiple targets be tested in back testing your strategy? I'll let the group answer this one. By the way, if you're on YouTube watching, please hit that like button. Best way you can show me love. You got an hour plus session today, bonus. You're lucky we're doing this workshop. Usually you're out a lot earlier than this, but it's workshop week. It's workshop week, so you're getting some bonus session. By the way, again, recordings and everything will be up till August 20th. So if you're not logged into the workshop, I don't know what to tell you. It's free. Free. Do it. Like it's not a trick. Just giving away free stuff for you to take advantage of. Like, why wouldn't you? Unless you're scared of success, of course. Yes, everything should be back tested. In fact, your back testing is what's going to tell you if it's worth taking 2 targets. Everything should be back tested. All right. Good stuff. Let's put 13 minutes on the clock. We'll come back. I'll ask you guys if there's anything else you want to take a look at. I always go away from whatever my plan is. But I'll see you guys in a little bit. Great first session, guys. Great first session.